So today we're going to talk about Tesla stock and what's going on and why the share price is dropping, and if this crash in Tesla stock is now a buying opportunity or one to stay away from. So I hope you enjoyed the video, guys. Let's get started. Now, just to let you know, there is a Patreon Black Friday sale going on. I don't plan to repeat this sale anytime soon, but at the moment, if you sign up annually, you will get 2 free months on the Patreon. So if you go onto the Patreon, you'll be able to see here, you'll be able to save 16% if you join annually. Just join through there and click annual and you'll be able to get 2 months for free. This will give you access to what I'm buying and selling in real time, as well as 2 exclusive videos on the Patreon every week. Now, obviously it's a pretty good offer, so I have limited it down to 100 places. I believe that there is currently 82 places left, and I'll only be running that for this week. So if you do want to take advantage of that, join through the link in the description, but we'll get stuck onto Tesla stock. So Tesla stock did have a pretty good day yesterday. I think a few analysts kind of came out and said, okay, the sell-off's a bit too much now. This is a pretty good buying opportunity, and I think that gave it a bit of a bump up yesterday. But previous to that, it's been a very rough time for Tesla. You'll see here it's down nearly 20% without that jump yesterday, and in the last 6 months, down 12%, year to date down 54%. So yeah, it's been a rough year for Tesla, and to see a 50% drop in a company that is 574 billion is quite rare. You don't normally see these big giants of these stocks kind of dropping this much, but we are in 2022, and what have we learned? We're currently going through one of the worst stock markets in the last 40 years. So we are getting these opportunities where you're having these big techs that would normally not drop 50%, dropping that much. You only have to look at the likes of Amazon. Amazon's down 50%. You have to look at Meta. Meta's even down more than Tesla. And Amazon, it's down 70%. You look at PayPal, PayPal's down nearly 73%. So we are in the year of 2022 where it has been a terrible market, and you are getting these opportunities out here. So with this in mind, is this now an opportunity to be looking at Tesla going, okay, it's down 50% in a year, do I go buy this opportunity? So I'm sure most of you guys know Tesla. It's an EV company, obviously going on the boom. The EV in the next 5-10 years is going to be huge, and you're going to get the number one player in here with their EVs, their technology they have, and also the significant upgrades of the semi-truck coming in the next few months, the Cybertruck coming in the next few months, and them entering more categories. Now, it does trade at 56 times earnings. We'll talk about that in a little bit, but I don't want to do a deep dive into what the stock does today. I want to look at why it's dropping and if it's a buying opportunity. So first of all, I think the key thing is to look at financials. Has there been poor performance in Tesla's financials this year? The answer to that is no. We can see here that revenue is up 55% year over year. That's absolutely insane. And when you've got that amount of growth, you can command a higher valuation. So when we look at the likes of Tesla, for example, that trades at 56 times earnings, sometimes people will say, well, it's 56 times earnings. Well, the thing is when you are commanding growth of 50% year over year growth, or 55%, you are not going to trade at 10 times earnings like Ford. It just doesn't make sense. So that is obviously why there's a significant valuation on Tesla. Net income, 103%. So as well as growing revenue, it's not just a revenue story here. We can see that profitability is also jumping up massively as well. So there's no problem in the financials. That's the first thing we've got to identify here. The next thing is the valuation. Is Tesla trading at a rich valuation? Well, when we look at the historic averages of Tesla, it's very hard to compare, because you can see here they're down at a 1, a 2, a 3, a 7 times earnings. And when you look at the share price, you'll see here that, and probably one of the arguments that are used for Tesla is that, oh, well, the share price went absolutely crazy, so it's deserved to have a pullback. Well, not necessarily, because when you actually look at Tesla from, let's say, 2019 to all the way to 2014, a 5-year time span, you'd be looking at only being up 8% on this stock. 8% in 5 years. And when you look at the progress from 2014 to all the way to 2019, and the share price has been stagnant, it wasn't stagnant inside the company in point of view of the developments and what they were making. Tesla in that point of view through 2019 into 2020 went from a company that only had kind of one model, moved into the Model S, moved into mass producing the Model 3. People said Tesla can't mass produce an EV car. They did it. Or you can't have good range on an EV car. They did it. Or Tesla can't come profitable. They did it. So through this 5-year time span, it took all this time for people to actually take Tesla serious as a car company through all that development they had inside the business. So people are like, well, it just went absolutely crazy on the share price. The reason why Tesla actually went crazy on the share price is because it got disrespected for 5 years and made no progress on the share price. But we know when inside a business, you fundamentally keep improving, sooner or later that share price will reflect it, and that's what happened. So from this point of view, we can't really use metrics from 2019 because we know the share price wasn't really fairly getting reflected at that point. But we'll see here, we did shoot up to enterprise value to revenues of 10, 15, 13, and now it's down at a 4. We're seeing EBITDA down at a 20. We're seeing normalized P down on a forward basis down at 31. So we can see here, these numbers aren't exactly crazy high. So we know the valuation isn't crazy strong for a company that's putting in these financials that Tesla is. And like I was saying earlier, you can't compare a company like Tesla to Ford, which a lot of the bears will always do, 6 times earnings, because at the end of the day, you're picking up Ford that is growing at 10% a year, and their net income is negative and decreasing 145%. So you can't compare a company growing at 10% and not making money to a company that is making money and growing at 100% and growing, revenue at 50%. It just doesn't work. So that kind of comparison goes out the window. And the only other one that you can actually maybe compare to is the likes of Ferrari. Now, just FYI, I actually have owned Tesla twice. I owned it through 2019, 2020, made good returns of 300% there. And I actually owned it on the drop off here up to here and actually doubled my money. So I've actually owned Tesla twice and made good money from it, this stock, which some of the haters at the moment seem to forget about. And I actually owned a stock, I actually owned Ferrari a while ago. It was actually one of my first ever investments that I had on the stock market. So Ferrari actually IPO'd around 2015, around $60. It then dropped down, as you can see here. It had an IPO flop, which, the hype after the IPO and then the stock sells off. You see this quite often with a lot of IPOs. And then the stock went down to $30 and had a run up through 2017. That's where I actually started picking up some of my shares in Ferrari, and I sold it off for 140% profit, which I was really happy about. Probably looking at this, actually, it wouldn't have actually been a terrible investment to carry on holding for a little bit longer than that, but still, I made very good money on Ferrari. The crazy fact about Ferrari is that they actually limit the amount of cars they produce. So they actually don't say, oh, we've got 300 orders, so we're going to sell 300 cars. They actually say, oh, we're only making 100 cars this year, and there's a big waiting list, and then they decide who they actually kind of approve to own the Ferraris, which is absolutely insane. Imagine that branding power, and that's why they've always done really well, and actually why Ferraris hold their value so well. Just a little bit of going off topic there about Ferrari for you guys, but I mean, the only company we could compare like Tesla to is kind of Ferrari, because Ferrari actually has a revenue growth of 20%, so we have more growth in this sort of stock. We have a net income profitable company growing at 10%, and this actually trades at 40 times earnings. It doesn't say here, but it trades around 40 times earnings. So that kind of gives you an idea that a branding power like Ferrari with good profit, these good growth rates, commands a 40 times earnings. So when you look at Tesla, is it too crazy that it commands a 56 times earnings when it's growing a lot faster and the profit's growing faster than Ferrari? Probably not. So that kind of gives you a bit of balance of like an idea of the potentially where it could be. So there's not really much problem here with the growth. There doesn't seem really too much valuation problem here for the stock as well. So I guess the next one is a recession. Could a recession impact Tesla? And the answer is yes. This could actually be one of the factors that are kind of weighing in on Tesla. If you were to have a recession, would people stop and go or think about maybe not going out and buying that expensive, Tesla? Maybe a Starbucks, you go, oh, that's only, a couple of pounds or a couple of dollars. I'll still carry on doing that. But the big step to buy a new car in a recession, yeah, you can understand why people are worried about that. And potentially that's some of the fear baked in to Tesla, is that if there was a big recession, this would get affected. And that's probably some of the thing that is getting pricing in at Tesla. But the thing is, I don't like looking at a stock and going, oh, would this stock be absolutely destroyed in a recession? Because you can make an argument that any stock could be killed in a recession, and I would prefer to look at it from a longer term point of view. That's maybe something to consider if you're a bit of a day trader or a short term investor where you're thinking over a kind of a, say a year's time span. But if you're actually long term and you think about what Tesla will be in, 3, 4, 5, 10 years, then I don't think you should price in a recession. But sure, I can see that there's some negativity priced in because of a potential recession. So that's something to consider into Tesla. I thought I'd also mention quickly, actually, while we're on about recession, do they have a recession-proof balance sheet? And the answer is yes. You can see here they've been paying down the debt and they've only got now 5% debt to equity. So they're actually in a very strong position for a recession or a massive recession. So worth pointing that one out. And I guess the next thing is Elon Musk, Twitter. Is this potentially overhanging the business at the moment? And I think this is actually a major contributor to the negativity at the moment created around Tesla. I think at the moment people are a bit worried about Elon Musk and Twitter and the whole situation going around there, selling shares off. Is he going to get sucked away from the positivity and the growth of Tesla because he's too busy focusing on his acquisition of Twitter? And I think this is potentially what is causing mass amounts of the drop in the share price at the moment in Tesla, caused around the drama around this acquisition. Now, my thoughts are with this is that potentially it could harm Tesla a little bit. However, with Elon Musk, I think he's got Tesla into a very positive place now, where it has become a bit more self-sufficient than where it was a few years ago. And I think that when you look at Elon Musk, he has already been running SpaceX and the Boring Company alongside Tesla already. And the thing is when you do look at Twitter, who was the previous owner of Twitter? It was Jack Dorsey. What did Jack Dorsey do? He actually run Twitter and Square. So you can see that clearly is able to happen. So I think that this is something that could potentially affect Tesla in the short term more and more, especially when there's more of this media concentration around Twitter, and especially Elon Musk, because he does sell the papers. It's a very good headline at the moment. So I do think that's weighing pressure on the share price and could cause short-term negativity on the share price. But as a long-term investor, do I worry about that Twitter acquisition? No. I think as soon as Elon Musk gets that Twitter acquisition into a place he's happy with, he will go back to focusing a lot more on Tesla. So I don't mind that at all, and in fact I think it's creating a bit of a buying opportunity in the short term. And one of the big things that has been focused on with Tesla and Elon Musk is that because he has been selling some shares off, obviously to help with the acquisition of Twitter, people have made a big deal of this. Now for me, this isn't a big deal that he's releasing shares in Tesla. And you can see here that these are the shares that he has sold. But when you actually look at what he is owning at the moment, it's only a 4% change on the position that he has. He still actually owns 81 billion value of Tesla shares, and he's still a 14% owner in the business. So even though he might have just sold 19 million of shares, that is only a little dent in what he has in this company, and he's still very much invested in what the game plan of Tesla is through ownership in the long term. So yeah, I'm not worried about that. And if you do like this platform that I'm using, it's Simple Wall Street, and if you join through the link in the description, you actually get 40% off on a 14-day trial. So go there, check that out if you want, guys. So with that considered, I think the more that this kind of mini recession and potentially this Twitter situation hangs over Tesla, I think Tesla is in for some short-term pain, which we have seen on the share price, and could potentially continue. So if I was looking at Tesla, I would be something that I would be gradually looking into and be a bit cautious, because I think this downtrend could continue, especially what we've seen in 2022. But it is starting to come quite a good opportunity if you think you can hold this for the longer term, I would say. And the big thing is, what are the numbers like for Tesla? So I had a quick look at some of the numbers here. I didn't put any share buybacks on it, even though because they have said they could potentially look at some share buybacks. I just thought I won't put them in. And we'll have a look at what numbers are coming out for Tesla. So the hard thing to predict is the growth in the next few years. I've got 15, 20, 25% growth. Now, obviously Tesla have said previously they want to keep towards that 50% as long as possible. And for me, I actually would expect this to be up towards the 30, 35%. But I have been a little bit conservative and left a bit of room for error. So you can see here 15, 20, 25%. I put profit margin of 10, 15 and 20%. I think that's quite conservative considering at the moment they're at towards a 14-15% profit margin, and I think the more these gigafactories will open up, that profit margins should go even higher. So I think that's quite a fair profit margin there for the next few years. And then I've put a multiple of 25 times earnings, and I'll just change that to 25 times earnings here. So 25 times earnings. So on the low side, it actually comes out with negative 37%. I actually, on the mid side, came up with 12%, and on the high side, there's 76%. So you can see here, with conservative numbers, Tesla does look okay, but not the best opportunity. Now, if I go away from the conservative numbers to what I potentially think Tesla will do, which is more towards 30% revenue growth with 20% profit margin in the next 5 years with a multiple of 40 times earnings, which is a bit more of a premium, just make you aware of that. I actually come out with the upside of 230%. So you can see here that when you put in the premium amount of growth, good profit margins, and a bit of a higher multiple, maybe like a Ferrari for example, it actually shows really good upside. But the key thing with Tesla at this sort of valuation here is that I think you can only buy Tesla if you believe they will continue to execute at good growth, improve those profit margins, and deserve to have a higher multiple. So I think that's a big thing for you if you want to become a Tesla shareholder. You've got to believe that they can continue or to have high amounts of growth, still hold on to decent profit margins, and then trade at a premium, which I don't think is unrealistic, but I thought I'd just make you aware of that situation there. So for me, I'm actually quite happy to be buying Tesla shares because I think they will execute around those numbers that I just put in there, where you'd get the higher amounts of growth. If you don't think they will, then obviously this is probably not a buy for you. But what I am going to say here for me personally is that I am playing this one quite cautious. I'm not really a big fan of Tesla over $200. I like it below $200, and in fact I like it more if it drops into this kind of where it is now 180, but ideally where it was before yesterday, the 170. If it drops into the 160, 150, even if it can go lower than that, that's ideally where I personally want to pick it up, just to take a little bit more risk off because of the need to execute at higher numbers. So that's for me personally where I would like to buy, and I have started buying, but I'm going to be very cautious on this one and slow and steady and try pick up in these lower digits or lower share price. That's where I want to be picking up. So I thought I'd just make you aware of that's what I'm personally trying to do in this situation, and I'm trying to give myself quite a long time frame in case we do hit a bit of a mini recession and sales do slow down, and then that should see that share price drop into that range, and that's ideally where I would personally pick Tesla up. So yeah, hope you enjoyed the video. Hopefully a bit of a mixed view on if you think it will be successful or not successful, and what they need to do to execute and do well on a share price point of view. So yeah, hope you enjoyed it guys, catch you in a bit.